Let's get more on all this on Qualcomm's jump, the AI rally. We'll bring in Gene Munster. He's managing partner at Deepwater Asset Management. So you've heard the discussion here, Gene. So how should we be thinking about it all?
Mike, we need to read between the lines, and beyond this Qualcomm news in 26 or 27, when they actually come out with the product, what they're telling us is that they see a big opportunity here. And I think it goes beyond them just looking at the headlines. I suspect that they're also talking to potential customers for them to make this level of an investment. And so kind of the thread throughout our conversation today has been related to what's the sustainability, what's next year ultimately look like on these CapEx numbers, because that's going to be one of the key takeaways from Wednesday and Thursday. And so, Mike, I just see the fact that I'm going to put Qualcomm in a group that is that is respectable in terms of how they think about the future. They've had some difficulties around the relationship with Apple, but the fact that they want to get into a crowded business, I think, speaks to how much supply constraint we have around different pieces in inference. So I want to put one final point on it here, Mike, is that the key numbers for this week is related to what Amazon and Google say about their CapEx growth. So Microsoft's at 22% for next year for calendar 26. Meta's at 42%, at least this is the street expectations. But Amazon and Google are at 8 and 13% respectively. Those numbers need to come up for AI to continue to trade well.
So they need to come up for AI as a category to continue to trade well. What about what it would do for Amazon and Alphabet respectively?
Well, I think that this is still what we saw with Qualcomm today. There's no substance behind this. This is a press release that has unlocked $20 billion in market cap. And I think that the reason why that's important is that the commentary about how optimistic and the kind of investment that Amazon and Google are making into CapEx, I think is going to be some sort of a barometer in terms of how investors generally think about their outlook. So I think that a positive, an increase in CapEx will be viewed positive. Just throw a little bit of a zinger at the end here, too, is that Google, Liz Reed, who is running Google Search, was out 2 weeks ago making positive comments about their search business. And so I think when it comes to Google in particular, that's a really high bar going into this earnings report.
Gene, you heard Karen talk about the cyclicality of the space, so maybe it doesn't deserve a market multiple yet. People are paying through the nose for a lot of the space. And Mike pointed out Qualcomm trading at maybe 15 times next year's numbers. I mean, what do they have to say next year? Maybe not to get them to a market multiple, but, 20 times next year's numbers puts the stock at about $250 or so.
So I want to be respectful to them and them wanting to get into some big business, but keep in mind, this is really hard to do what they're talking about here. AMD talked about this 2 years ago. They're exiting version 2 of their chips, their GPUs, and they really haven't had much progress. The growth and the uptick in analyst expectations is based on version 3 that's coming out, generation 3. So when I think about Qualcomm as the stock, and I think about all these different levers, my general sense is it's cheap, but it's cheap for a reason, and I'd rather invest in other places.